Hello everyone. So let's talk about a company that's making a really interesting, really bold move. This company is JK Cement, and they're doing something that could completely change the game in North India's cement market. This isn't just them adding a new machine or two. We're talking about a massive, nearly 5,000 crore rupee power play. They're building new factories, jumping into markets where no one else is, and seriously beefing up their production muscle. But here's what makes this a potential game changer, the part that's really audacious. A calculated strike into a brand new territory for them, Kashmir. So in this video, I want to walk you through their big master plan, break down the numbers behind this huge bet, and analyze what it could mean for everyone else, the industry, and of course for us as investors. Okay? So to really get why this is such a big deal, we need to zoom out for a second and look at the big picture. India is right in the middle of a massive infrastructure boom. The government is spending a ton of money. We're talking over 11 trillion rupees on building a modern India. Think highways, bridges, and a huge push for affordable housing. And what's the one thing you absolutely need for all of that construction? A whole lot of cement. This is creating a huge wave of demand. Experts are forecasting an 8% jump in cement sales for 2025 alone. And the whole market is expected to grow from around $17 billion now to over $23 billion by 2029. This isn't just a small upward trend, it's a powerful current. And JK Cement is trying to position itself to ride that current, not just as another player, but as a leader. It's a competitive battlefield out there. And this is the master plan they're deploying. Okay, so what exactly is this big plan? Let's get into the specifics. The company's board has greenlit a huge expansion, pouring in about 4,805 crore rupees. This money is going to add a massive 7 million tons per year of new cement capacity. Here's how it breaks down. The heart of this is in Rajasthan, where they're building a big new clinker unit and a cement grinding facility. To support that, they're also setting up 2 more grinding units, one in Rajasthan and another in Punjab. This isn't random, it's a carefully planned network to make their home base in the north even stronger. Now, this is just one part of an even bigger vision. The company is already on track to increase its grey cement capacity from about 25 MTPA to what they're targeting as more than 31 MTPA by the end of 2025. But trust me, the ambition doesn't stop there. Their ultimate goal is to hit a massive 50 MTPA capacity by 2030. That's almost doubling their current size. So, long story short, they're sending a very clear signal. They plan to aggressively grab market share and become a dominant force. An expansion this big is never just about getting bigger, it's about getting smarter. And the why behind JK Cement's plan is actually pretty clever. First, let's talk about locking down the north. The new plants in Rajasthan and Punjab aren't just adding capacity, they're reinforcing their home turf. This area has huge demand and growth. By putting factories closer to key markets like Punjab, they can seriously cut down on logistics and freight costs. That means faster, cheaper, and more reliable delivery for customers. It's all about building an efficient footprint in a market they already know inside and out. But here's the really interesting part, the boldest move in the playbook, the Kashmir Gambit. JK Cement is now the first major national grey cement player to set up production in Srinagar. They've done this by acquiring a 60% stake in a local company, Saifco Cements, for around 174 crore rupees. This is a huge deal. For decades, this region has been a market with so much untapped potential. By setting up shop locally, JK Cement gets a massive first mover advantage. The plant they acquired has its own limestone reserves, which is critical. This means they won't have to ship in raw materials or finished cement over the mountains, which slashes their costs. Their JK Super Cement is already being manufactured and rolled out across key districts in Kashmir, positioning them to be the ones powering the region's growth. And while the north is the main focus, they're also quietly expanding their reach in central and eastern India. So you can see a pan-India ambition here, but it's all built on a foundation of dominating one region first. Alright, a big plan is great, but a bold strategy is only as good as the numbers behind it. Does the math actually work out? Let's take a look. The company is spending nearly 5,000 crores, but they have a very clear goal to make it pay off. They're targeting cost savings of 150 to 200 rupees on every single ton of cement. The question is how? This is where it gets really smart. The answer is a mix of green energy, smarter logistics, and branching out into related businesses. Power and fuel are the biggest costs in cement, period. JK Cement is tackling this head on by making an aggressive shift to green energy. They have a huge stated goal to increase their green energy share to an ambitious 75% by 2030. You can already see this working in their Q1 results, where their margins got better partly because of these efficiencies. This isn't just good PR, it directly hits their bottom line by cutting their reliance on expensive, volatile fuels. The smart placement of their new plants, especially the one in Kashmir, is the other piece of the cost-saving puzzle. Making cement locally just saves a ton of money on freight. And beyond just cement, they're cleverly diversifying. They're already a leader in white cement and are expanding their wall putty business. On top of that, they've now jumped into the paint business. These aren't random moves. These are products they can sell through the exact same dealer networks, creating a whole building materials ecosystem under one brand. And the latest financial results seem to back this up. For the first quarter of FY26, JK Cement reported a massive 75% year-on-year jump in consolidated net profit to over 324 crore rupees, with revenue climbing over 19%. Their grey cement volumes grew by 16%, which suggests they're already successfully taking market share. Now, no investment thesis is complete without looking at the other side of the coin, right? We have to be balanced. While this plan is impressive, it's definitely not without challenges. First up is execution risk. A multi-thousand crore project spread across different states is incredibly complex. Any delays could lead to costs piling up and pushback when they start seeing returns. Second, the entire cement industry is at the mercy of input costs. The prices of key things like coal and pet coke can go up and down like a yo-yo, and that can really hurt profits. They're trying to manage this with their green energy push, but it's a risk for the whole sector. And finally, competition. The Indian cement market is fierce. You have giants like Ultratech and the Adani-backed Ambuja Cements, who are also expanding like crazy. They're not going to give up market share easily. And this could lead to price wars, especially in those northern markets. So after breaking all of that down, the plan, the strategy, the risks, what's the bottom line for us as investors? The potential upside is pretty clear. If JK Cement pulls this off, it could lead to them dominating the market in North India, having a very profitable and protected business in Kashmir, and seeing their overall profits grow from all these cost savings. They've already shown they can grow faster than the industry, and this plan could solidify their position as a regional powerhouse. So if you're watching this company, there are a few key things I'd keep a close eye on. First, the project timelines. Are they getting these new plants up and running on schedule? Second, the Kashmir business. Is it ramping up? And more importantly, is it making money? That's the real test of their big bet. And third, what's their progress on those cost saving and green energy targets? Because that's key for their long-term health. So to wrap it up, JK Cement isn't just sitting back and waiting for the future, they're actively trying to build it. Through a really bold and transformative plan, they're aiming for regional dominance, pioneering new markets, and building a more efficient and sustainable business. The strategy is clear, the investment is huge, and the early signs look promising. Oh, what do you guys think? Do you believe this aggressive push into Kashmir is a master stroke that will pay off big time? Or are the risks from execution and competition just too high? Let me know your take in the comment section below. And hey, if you appreciate deep dives into companies making bold strategic moves like this one, make sure to subscribe and hit that notification bell. That way you won't miss our next analysis.